So, if there was a Super Bowl week every quarter, this is it. This week has the most major name companies per earnings in one week. So, because of this, I have a ton of companies to go over, and there's a couple ones that are actually worth buying, in my opinion, and definitely buying if we have one of those juicy post earnings mini collapses. So, let's begin here. Now, for Monday, we've got a couple interesting ones. We have F5, which I do not consider very interesting. In fact, this is a short contender, so I have kind of limited upside. Problem with this company is the good side is that their P ratio compared to their sector is still pretty undervalued, but I hate seeing weaker EPS growth year over year relative to the average for the sector. So next year, anemic 6.69%, not so interested. Okay, and like I said, I'd like to have these stocks kind of focus on longer term investing as well, because most of you will be more in the longer term investing category. Waste management, no interest. Next year is going to be a pretty weak year. Overall, it's predicted that next year will be a much weaker growth year, obviously for S&P 500 than this year has been, which is to be expected, seeing this has been such a monster of a year. But some stocks will still grow better than their average next year, and those are the ones I like the most. Otherwise, I like having stocks that are pretty value, like Ford. So Ford, nice PE. 5.96 is well below the average for auto. 0.26 price to sales, so revenue-wise, they kill it. And they have a juicy 5.42% dividend. I have a little bit of Ford. I want to buy some more. The funny thing about Ford is the auto sector had a roughly negative 6% EPS growth for this year. It's been a pretty bad sector. Next year, while Ford will grow a little bit, very, very anemic, and sector overall is going to have a stronger rebound. That being said, the dividend aristocrat, that's very undervalued, and just a nice, safe stock. I prefer having a wide variety of wins that come from different sectors, but mostly have one similarity where it's usually a low risk buy. Ford is not low risk buy category. Now, so I've got a monster here on SoFi. SoFi is a great stock. Now it's worth mentioning that SoFi still has some violent downturns like most growth stocks do, and I'm not a fan of buying growth stock with PE above 100 because I still kind of like trade these back and forth, and even though I'm kind of long term investing in it, so still wait for a pullback. But I mean, next year 160% EPS growth, absolutely massive. Now Snapchat is a similar case. However, I like the P ratio a lot more, a little safer, good valuation right now, and I will buy some more of it. It's also Snapchat being a little less valued going into earnings could be a pretty nice move up after earnings. So that's the one I will be buying on Monday. AMD, potential small buy Monday, but if you look at AMD's history, it's kind of volatile. So what kind of stock you want to rush into, but this trade rich relative to its overall sector, and with 54.5% EPS growth, pretty good, better than the sector average for next year, but not mega better. So still gonna kind of wait on that one probably. So it's a small buy overall. Also 10.86%, 10.86 PS is a bit rich. So trade's a bit rich. So that's worth mentioning. Google is a hold for me primarily, where it's actually still well below where it should be trading at valuation wise. Next year, a little slower when it comes to EPS growth, but that's kind of across almost every sector, so nothing too crazy there. Still worth buying if you're not in it already, but for the most part, better as a hold. Google is a pretty easy buy right now, in my opinion, but it's fine for a hold. Visa, is a no interest stock. It's going to have much weaker EPS growth than the rest of its sector. So kind of like why bother with Visa in my opinion right now. So starting Wednesday, we're going to look a little more on the investing side of the house. Humana is more an investing stock, where it's done very poorly this year with minus 38% EPS growth. However, it's going to rebound a bit next year with 22%, which is well above the average. It's already got below the average PE for its sector, and it still makes a lot of money with 0.28 PS. A little dividend if you wait, but if you buy Humana, you're largely buying Humana to wait for a year from now, where the stock price should be a lot higher than it is right now. This is a rare case where this is a sector that overall will do a lot better next year. Most sectors are going to do better this year versus next year, but health insurance is not that category. So you're talking Humana, you're talking about UNH. Those kind of stocks are going to do much better next year than this year. So this is one of those cases where it pays to build up a position right now, or if you're interested in kind of moving money out of one sector to another sector, health insurance is a fairly safe play for next year. Eli Lilly is a biotech stock to the nth degree, a very large biotech company that has killed it this year, 118% EPS growth. Biotech stocks are almost always going to have P ratios. They're very large, but even within its sector, it trades very, very rich. Now, because of all this, I'm going to sit in the sidelines and wait for it to pull back, because it inevitably does pull back eventually over time. But even next year, 75% EPS growth, pretty strong. That being said, Eli is still risky because if the company does get hammered by the government, the stock can go to hell. So risk reward right now, not as strong as it used to be, but still it should still do pretty well next year. So Microsoft, not interested. Meta, I would love to see a pullback. I'm hoping Meta has a bad earnings again, which occasionally happens, but it's unlikely. They're still a little undervalued, believe it or not, for the sector, and they've actually killed it with 44% EPS growth this year. However, Meta is supposed to have a little bit of a downturn next year, so they're still going to grow, but not going to grow as much, and weaker than the overall average. So no rush in that one. Coinbase has had the best EPS growth I've ever seen for a year. So 1,345% is insane. They lost money last year, but absolutely insane. They're only a little undervalued. I'm still going to wait on Coinbase. Coinbase is a weird one where the time to buy Coinbase is generally when cryptocurrencies are crashing, because Coinbase crashes with them. So right now crypto is pretty solid. So there's no real rush to jump into crypto right now, and consequently, no rush to jump into Coinbase right now. Now for Thursday, got a couple interesting ones. You have Uber, which is worth a small buy, where this is where it gets ridiculous, because the Ubers, the Lyfts, these are very high growth sectors, so it still looks like it's cheap. It's not obviously 70 P is not cheap, but for the sector, it's okay. The EPS growth is pretty wild. The funny thing is that sector, 109% would be insane for almost every other sector, but for this sector, Uber is just a bit better than its competition. So that's how crazy sector by sector is for these comparisons. It's worth a small buy, but with all these, it's better to wait for major pullbacks. Estee Lauder is probably my favorite buy of the week, where it's a bit overvalued, but it's going to have stronger and stronger growth. So 35.5. It's a lot better than its sector average, so that's important. Still trades fairly reasonable on the PS side. It's had a rough year. Talk about Estee Lauder, talking about your Elf. None of those have been very strong this year, but they should do a lot better next year. So this, Humana, those are my favorite buys honestly right now. But Estee Lauder could bump after earnings, so it's worth. This is the one I'll definitely buy this week. Amazon, a little more volatile sometimes, but obviously like Microsoft trends upward. That being said, well above the average for PE wise. Just wait for a pullback for me, at least for me. Some guys will go into it's whatever. I don't really care. You do you. I'm just kind of these videos. I just show what I'm doing. Apple is this is where I'd probably want to short Apple. I might short. It's very hard shorting Apple, so it has a potential short. Right now, it's like Amazon. It is overvalued PE wise, but next year difference is Apple will have weaker EPS growth relative to sector overall. So like I said, potential short just because it's crazy high right now. iPhone sales are questionable. I'm not sure how strong they've really been. We'll see on Thursday. I probably won't short this, but if I was to pick one of the 7 stocks to short, probably be Apple. But in general, they're very hard to bet against. So I still probably won't short Apple. Then we go to Friday. Friday has Fubo, which I actually probably will buy Fubo. One of my favorite little tiny companies that should do well next year. They're doing pretty well EPS growth this year. They're going to basically double the EPS growth next year, and next year they should be profitable. So right now they're about basically $1.5 per share. So they should go quite a bit higher next year as long as they do hit profitability. Chevron, I had a whole video on oil that I made earlier this year where Chevron is like Exxon. It's going to have a stronger PE relative to some of the other oil companies. Their sector has been terrible this year, negative 17% EPS growth, very bad. But next year, relative sector, Chevron will do better, 60% EPS growth. So that one I'm not buying anymore. I'm just holding shares. Very easy to hold shares for Ford or Chevron, where they're dividend aristocrats, so you're still getting a nice juicy dividend while you're waiting for the stock to do much better. Simon Property Group is a stock that's done very, very well this year. So that being said, it's going to bounce back next year where it's going to have a little bit of negative EPS growth. So, and I say very, very well this year because 2.72% isn't that great, but the stock price has been very strong. So stock's done pretty well. It's also very sneaky little dividend aristocrat with 4.81%. However, it's in that potential short category where next year we're looking at negative EPS growth. So this could be a longer short. We'll see. I might short this one. But overall, we've got a lot of great stocks this week to choose from. So happy trading, happy investing. Overall, I'm going to be interested in buying stocks after earnings where we'll have a couple ones that have very dramatic decreases like usual. And that's where we pounce in. Because remember, right now at all-time highs. So I prefer to be mostly on the sidelines, a bit more bearish for all-time highs. Have a good one, guys. Happy trading.